Welcome to Rule Classroom Live. I'm Albert Boo, here as usual with Rick Rule. Rick, how are you today?
I'm fine, Albert. I trust you're doing well as well.
Doing excellent. Excited for today's stream, Rick. There's a lot going on in the markets, which I'd hope you'd comment on to start off the stream before we get into the questions. And I hope you'll touch on the sort of opposite directions of gold and silver we have today. But your thoughts on what's going on lately?
Well, first of all, with regards to the opposite directions, I have no earthly idea what's going on. Let's get that one straight. But I think it is probably coming to be time for silver to pick up the pace. We've discussed at the Real Classroom many times the fact that precious metals bull markets are led by gold. The fear buyer always comes before the greed buyer. When the narrative is established by gold and the generalist investor starts coming down into the space, silver, perhaps because of its lower unit value, picks up the pace and begins to outperform gold. Silver has been a laggard relative to gold, and it might be that people are figuring that out. I would caution people listening to this discussion today to not be too focused on the day by day. If I've noticed any mistakes that speculators make as a consequence of grading tens of thousands of portfolios, it's that people's time preference gets in the way of their investment performance. I believe that the precious metals bull market that we are enjoying today has a substantial amount of time left to it. And it doesn't merely go higher, it goes substantially higher. Whether or not leadership transitions from gold to silver today or a year and a half from now are probably less relevant. What's more relevant to you is patience and position sizing. I would caution all of you who get excited about day-to-day moves that you could have very substantial down moves or very substantial up moves that really have nothing to do with the underlying bull market. I am reminded of my own entrance into the space in the 1970s, and in the fact that in 1975, when interest rates were allowed to rise, or forced to rise, pardon me, that the price of gold fell by 50% in 1 year. That shook out a lot of the so-called faithful, and those who did get shaken out missed a move when gold resumed its upward trend. From a low of $100 an ounce in 1975 to $850 an ounce. The point of all this is, while it's fine to get excited or frustrated or whatever, on day-to-day moves, it's much more important that you pay attention to the fundamentals and the trends that are more likely than not to occur. Stay the trade in precious metals. Don't get yourself too excited one way or another day by day. Congratulations to the silver bugs. Who knows whether there's any follow through in the near term? I'm almost certain that there'll be follow through in the long term. I hope that helps, Albert. One of the things that really amuses me today is the increasingly personal nature of the dispute between our president and his former erstwhile colleague, Elon Musk. Since Musk started describing Mr. Trump's, quote, big, beautiful bill as a big, ugly bill, and pointed out that while the spending was current, the budget cuts were promised. In other words, pointing out that the bill, in terms of being about smaller government, was a fraud. Mr. Trump's rebuttals have been increasingly verbose. And amusingly, to me at least, the dispute got personal today. Musk just said a couple hours ago that the real reason that the Epstein file names haven't been released is because Mr. Trump is on it. Mr. Trump didn't think that was very funny. And so it would seem that what was until a day ago a policy dispute has become a personal dispute. Well, nothing really that I can think of could make me happier than a bunch of high-profile politicians fighting with each other so they can leave me alone. I think the spat and the issues around the spat are likely to continue to polarize American politics and likely to cause more turmoil in equity markets and debt markets. With regards to the bill, I agree with Mr. Musk. I don't think his criticism, frankly, went far enough. Over 1,000 pages of hidden spending, hidden subsidies, all kinds of transactional gobbledygook. This had nothing to do with making America great or making America's government smaller. This was a traditional transactional bill in the best sort of tradition of both the Democrats and the Republicans. That's how we got ourselves in the condition that we're in today. The dispute around the bill masks a bigger problem, which is to say our ongoing debt and deficits and our ability to sustain the level of government and the level of government services that we, quote, enjoy today. Which is to say the reckoning, is something that is to come in the future, and I'll talk about that in a minute. But the dispute, the polarization, is something that is likely to inflame all kinds of people's emotions, big and little. And inflamed emotions are all about what market volatility is about. So my gut tells me that the next 6 or so weeks should be more volatile than usual. If you have the personality like myself, where volatility can be used to your benefit, which is to say, if volatility results in rapid share price declines that you are inclined to buy, or if it results in rapid share price increases that you're inclined to sell, this volatility can be a very good thing. If, however, you know yourself to be a person who is more easily influenced by your emotions, you're going to have a very difficult time, I would suggest, in the next 6 weeks, because stuff is going to be, up and down. There's going to be all kinds of wild prognostications. You're going to have to be very careful that your emotions don't get in the way of your portfolio. Looking forward, I think the impact of this bill, whether it passes or not, what a subsequent, if any, bill looks like, the trend is very clear. We've talked before at the Rural Classroom about the fact that the net present value of off-balance sheet obligations facing the U.S. government exceeds $100 trillion, while the on-balance sheet obligations owed to bondholders exceed net $30 trillion. We've talked, too, about the fact that the accretion of liabilities, both on-balance sheet and off-balance sheet liabilities, is proceeding at about $4 trillion a year. This is unsustainable, as is a political correction to this unsustainable trend. It is my personal belief, and I'd like you to think about it as opposed to believe it because I believe it to be true. My personal belief is that the end result of these unfundable political promises that we can't politically renege on is that the purchasing power of the US dollar in the next 10 years will fall by approximately 75%, very similar to the 75% decline that we faced in the US dollar, in the purchasing power of the US dollar in the period 1970 to 1980. Is this a certainty? Absolutely no. Other things could happen. Is this a contingency worth insuring on? Absolutely. And how does one insure? Well, precious metals. And if you're willing to do the work, precious metals equities is one way. As we've discussed before in the rule classroom, the volatility in this asset class during a bull market is extraordinary. 200%, 300%, 400%, 500% moves are commonplace. So it doesn't take an outsized portfolio allocation in precious metals and precious metals equities to shield the rest of your portfolio from the impacts of a 75% devaluation in the purchasing power of the US dollar. I want to clear something up too. I've noticed in the comments a suggestion that this decline in the US dollar was relative, which is to say declining against other currencies. I think the US dollar will likely outperform many currencies, despite the fact that the purchasing power of the US dollar in US dollar terms, in absolute terms, falls by 75%. Some other currencies likely fall even more. So while I understand that you need to maintain liquidity, at least some of you do in a variety of currencies, understand that my discussion of the decline in the purchasing power of the US dollar relates to US dollar domiciled portfolios. In other words, it isn't relative to the Canadian dollar or to the euro or to the pound or anything like that. It's a decline in absolute terms. One final thing, Albert and I just did a wonderful interview with Omar Aljande, who's the new CEO at Agnico Eagle, Agnico Eagle being a sponsor of the 2025 Natural Resources Investment Symposium. This interview was a little longer than our norm because I thought the interview was going very well and Albert was polite enough not to shut it down. I urge you, all of you, to stay tuned in the next 2-3 days to the Rule Classroom after Albert has managed to touch up some of the technical difficulties we experienced and get it posted. It's a very, very, very worthwhile interview. All the interviews are worthwhile, but this one was a particularly worthwhile interview, talking about corporate culture and the impact of corporate culture on the corporate bottom line. It's the wonderful sort of educational interview that I think the Rule Classroom needs more of. So, Albert, with that, perhaps we should get to questions and answers, provided that there's some questions to answer.
All right, thank you for that, Rick. That was kind of a rare venture into the macro, which I appreciate every once in a while from you, because it's not something you do often. Let's go to Han with the first question. What's your comments on Gold Mining Inc. and Bellevue Gold? Says gold mining looks very undervalued.
I'm a shareholder of both. When you say gold mining is undervalued, I'm not sure it's terribly undervalued on a net present value basis, but there's an awful lot of leverage to a repricing of gold or the perception of gold from historical levels to today's levels. Yes, the company does have in its portfolio several royalties which pay now, and the velocity of royalty payments increase in the next 2 or 3 years. The real leverage in the gold mining portfolio, though, has to do with the portfolio, the incredible portfolio of non-producing royalties, and the ability of the management team, both at Gold Royalty and at Gold Mining Inc., to assist the companies in developing those projects to production. This is a sort of an optionality and management play. Bellevue is different. They had some operational difficulties that they got punished for, and I think they're in the process of straightening those out. This is a very, very, very high quality project that I think will do well this cycle. I own both.
Okay. Ash wants to know about Barrick, Rick. Undervalued? Apparently, ChatGPT thinks it is.
I'm sorry?
Apparently, ChatGPT thinks it is undervalued.
If you compare Barrick by many metrics, many financial metrics, it is undervalued relative to the market. The market is concerned about several things around Barrick. Backward looking, Barrick had a very, very bad balance sheet 10 years ago and spent a lot of time repairing that balance sheet. Part of repairing down the balance sheet probably had to do with deferring sustaining capital investments in a variety of their portfolio companies, which meant that their all-in sustaining costs rose as a consequence of underfunding development capital. A second problem has been the concentration of the company's assets in Africa. Mark Bristow built up Randgold, one of the successors to the current Barrick, through some incredibly astute work in West Africa in the decade of the 90s. And some of those assets are in countries that have become politically restive, particularly in the case of Mali, where where Barrick and the Malian government have been in a series of disputes that involved, among other things, the Malians incarcerating Barrick's management as a negotiating tool. The third problem, I think, is that Bristow believes that in terms of world-class tier one deposits, most of the major gold deposits in the world are tied up in copper deposits. And he sees growing Barrick's gold production as a byproduct of an increasingly large copper inventory. Pure gold investors don't like the fact that Barrick has renamed itself from Barrick Gold to Barrick Inc. And I think they're probably apoplectic over the fact that the company's growth strategy primarily involves a very large copper gold porphyry, Reko Diq, which I helped finance the discovery of, by the way, in Pakistan. I think that some of the pure gold players want jurisdictions that they can spell and pronounce and want their gold company not to be sort of, if you will, a copper company in drag. I've known Dr. Bristow for a very long time and have a very high regard for him. My only concern with regards to that is that Bristow is nearing my vintage, which may be meaning that he is too old to keep the pace at Barrick. I like the Reko Diq deposit. I have a reasonable confidence that the Barrick strategy is a good strategy. I'm not so sure in the near term that the market will like it, but I do agree with the questioner that by most conventional metrics, Barrick is cheaper than the rest of the gold space. And the balance sheet problems are in fact behind them. We'll see if they can conquer the escalation of all-in sustaining costs, particularly in the Nevada operations, which, as many of our listeners know, they share with Newmont Mining.
Rick, we have a question about Battle Bank, so I'll just take this opportunity to remind people that Rick and Frank have a special live Q&A scheduled for Friday. That's going to be on the Rural Investment Media YouTube channel. And Rick, you're going to do a talk called The Economics of Banking, which I'm really looking forward to. And following that, you're going to do a live Q&A. So what can people expect from you and Frank?
Well, as you know, Albert, I've been a bank investor for a very long time because banking, if you get it right, is a very good business. You make money on the spread between what you borrow money from your depositors at, which, by the way, is subsidized by the federal government through the FDIC, and what you lend it to other customers at. And then by, first of all, controlling non-performing loan, which is to say underwriting loans correctly, and controlling your costs. It is truly a great business. It's one of the few businesses that I know of, and Charlie Munger, Buffett's late partner, pointed this out. It's one of the few businesses in the world that, if well run, can generate 15 to 20% compound internal rates of return, where the return can be reinvested in the same business over the long term at the same internal rate of return. Think about the impact of a 15% compounded internal rate of return for 5 to 7 years. And so what I'm hoping to do is take people into a bit of a deeper dive into how banking investments work. Frank, the CEO of Battle Bank, will turn the economics of banking around a little bit and talk about the economics of your relationship with your bank. uh, how you should borrow money, how you should think about depositing money. I'm going to talk about the economics of banking from an investment point of view, and he's going to talk about the economics of banking from a customer's point of view. For many people who haven't thought so much about banking, this will be a very, very useful discussion.
Yeah, and we may have accidentally put on the email that it was Thursday today. It's actually tomorrow, same time. We got the date right, but I think the day was specified as Thursday. It's actually Friday, tomorrow at this time. That's great. And if you have questions, definitely bring them because we will be live. You'll be able to register your questions. But Tillman has one now, so I'll just sneak it in, Rick. Plans on expanding Battle Bank to Europe. Has that even been discussed?
Our last bank, Everbank, after we got it open in the United States and Canada, we were able over time to expand the bank to 26 or 27 countries. That's a timely process. We have to comply with US regulation and foreign regulation. So to begin with Battle Bank, we will be open for Americans and Canadians and for US-based trusts or corporations that can be owned by foreign people. In other words, we can bank foreign people provided that we're banking a US or a Canadian entity on their behalf. It is our intention that we will expand our range of services to the citizens of as many countries in the world as exist where we can comply with their domestic banking regulations.
Okay, from Dave, your ranking on Minera Alamos.
Ranking suspended. I'm studying Minera Alamos as we speak.
Okay, let's see. Another one from Dave, follow-up. Are you starting to sell some of your gold and silver mines in the recent run-up?
I have not sold my gold and silver mines in the recent run-up. What I do is I continue to run net present value calculations on them relative to the increase in gold price. During today's interview with the Agnico Eagle CEO, I pointed out, and he corroborated the fact that although the share price of Agnico Eagle in 18 months has doubled, by financial metrics, the stock is cheaper now than it was then because the increased margin, the consequence of the outpacing of the gold price relative to the costs of producing it means that on a financial basis, the company is cheaper now than it was when it was selling at half the price. And I've run these calculations again and again and again on a variety of companies. And I don't feel, despite the run-ups, that if you value the net present value of their cash flows at today's gold price or at the strip, that they're expensive. I also think it's more likely than not, as we said at the beginning of this discussion, that the answer to our political and budget conundrum is to reduce the purchasing power of the US dollar. If passes prologue, that will be accompanied by an increase in at least the nominal price of gold.
Okay, Rick, I'm going to put a question up from Helen Shee. She references a conversation you might have had about the Permian Basin water management before. Does that sound familiar? She's asking what to buy with the lower and lower oil and gas companies.
The problem that I talked about in the Permian Basin may be a theoretical problem. It has to do with the fact that the surge in production that we've seen from the Permian has been accompanied by almost unimaginable amounts of produced water, co-produced water. This water often, well, in almost every case, it's very salty, it's briny, and in some cases has a lot of dissolved minerals, which means that you can't dispose of that water on surface. You can't flush it down the toilet or do anything like that. You have to re-inject it in formations. And we're having real water balance issues where formations deep underground are experiencing inflows, artificial inflows of water, which is to say injections of water from us, in some cases exceeding the theoretical storage capacity of the basin, and also beginning to cause seismic activity. This ability to dispose of co-produced water could become, I'm not saying it will, but it could become a real issue in the basin. It could become a political issue in the basin. It could become an issue that's addressed by the Texas Railroad Commission, which is the regulatory agency. So it's something that people who are invested in the Permian and invested in the Permian as a consequence of their belief of continued production increases need to consider. Uh, Drilling activity in the Permian below $60, particularly below $60, accompanied by lower oil and gas equity prices and higher interest rates, which is to say the deadly combination of lower product prices and a higher cost of capital, is slowing down drilling in the basin at any rate. If you add on to that increased water disposal costs, which may or may not occur in the next 2-year time frame, what that means is that the net present value of many companies' proved undeveloped locations is lower than the market has been led to believe.
Rick, question from Jay. He wants to know your views on CGN Mining's new supply contract pricing.
Well, I think the market likes it. I would caution observers that this probably isn't a bellwether contract in the sense that I don't think it's going to affect lots of other contracted parties. I think that for those who haven't paid attention, CGN has put in place a contract that allows for substantially above market payments, $90 a pound, escalated at 4% compounding for about 20 to 30% of the affected production. What this is, in effect, is partially a subsidy from the Chinese state to CGN for securing uranium. Many governments, the American government, too, subsidize or are preparing to subsidize their domestic uranium business. So part of this contract needs to be looked at as a premium price contract, perhaps reflecting the view of the Chinese about the future of the uranium market. And I think part of it is a not very carefully disguised subsidy to their domestic industry.
Okay, let's see. Question regarding two companies from David, Rick. One is Alphamin. Wants your comments on the recent transaction with Abu Dhabi and Alpha Exploration as well.
I'll pass on the Alpha Exploration discussion. I have some information which may or may not be material non-public information, but I want to be careful about that. The transaction, Alphamin generally exposes investors to easily the best tin deposit in the world. Wonderful production profile, put into production against all odds, but in a very difficult part of a very difficult country. It's in North Kivu, and it's in the western part of North Kivu, near the Ituri. This is AIDS country, this is Ebola country, this is warlord country. A warlord dispute with the M23 rebels caused the cessation of production. So the transaction with Abu Dhabi is useful in many ways, providing financial stability to a company, enabling the company to continue to explore at least two parallel trends, which threaten to make this thing a multi-decade producer. I'm in favor of it. I would tell people who listen to me and are tempted to buy Alphamin that it requires a real stomach, not just for perceived political risk, but for real political and social risk. This is a part of the world where disputes between warlords are common, and where some of the political forces are basically just armed robbers. And that's important because the concentrate which leaves the mine leaves by truck travels 400 or 500 kilometers, and every truck has $750,000 worth of readily marketable concentrate. And when the people who are enforcing the law are also the most prominent lawbreakers in the area, you can understand the potential difficulties going forward with the political and social chaos, given the very, very, very high dollar value on the transported material and the dire poverty that the people in that part of the world are experiencing.
Rick, question from Luis asking about the Palmer project that American Pacific Mining has acquired. Wants to know why, how do you pronounce it, Dawa has pulled out of it after investing tens of millions?
Palmer appears to me, I mean, it's an interesting deposit. It's been around for about 30 years. It's too small to interest me. Why Daiwa went into it is beyond me. American Pacific, I think, probably feels that in this market they can finance it to production. I don't know if they can or if they can't. My own experience with small mines has been lousy. I've learned that both big mines and small mines have big risks, but big mines can make you big money, and small mines can only ever make you small money. This may work in today's market climate. The market may like it better than I do. It's not the sort of thing that I play with.
Okay, Luis also asking about Metalla royalties, Rick.
I'm not an owner of Metalla, but I'm beginning to be disposed towards it. Metalla used their very high share price and hence their very low cost of capital about 10 years ago to expand very rapidly. They, I think, in the context of their time, overpaid for some royalties, but time has made them right, which is to say that the commodity prices have gone up and those royalties are now worth more than they paid for them. And they're beginning to produce. Metalla is looking attractive to me on many fronts, although I don't own it. And they will not, as a consequence, be presenting at the Natural Resources Investment Symposium.
Okay. Let's see, from Roger, asking about Rockhaven Resources, the Kleza project, or I don't know how to pronounce that, Rick. Will it ever become a mine is the question.
Plaza, if you give me the use of the word ever, that might be the case. I'm not a Rockhaven shareholder, although I was a couple decades ago. Kleza is an interesting project, but it needs an awful lot of work. And whether or not the work, first of all, whether or not the work is done in time for that to be put into production in this cycle is up for question. And frankly, whether or not further drilling gives us the tonnage and grade necessary to overcome where the deposit is a different question.
Okay, just a brief commercial segment here, Rick. If you're joining us on Twitter, joining us on YouTube, we're taking our questions from the Rural Classroom, and you can join us by registering at ruralclassroom.com with an email address. Membership is free. There's lots of educational material on there and a thriving community of over 12,000 retail investors in the natural resource space. Among them, Rick Rule, who is there regularly asking and answering questions, Rick. And one more thing, you mentioned the conference. It is sort of the conference countdown here. July 7th is our symposium in Boca Raton. Lots of great speakers. I just want to mention people can go to symposium.ruralclassroom.com for details. Rick, is there anything you want to say about this symposium before we get back to the questions?
Well, two or three things. We opened this discussion today by talking about the dispute between Trump and Musk over the big, beautiful budget, so-called. The symposium this year will feature David Stockman, who presided over the original Department of Government Efficiency, which is to say, he ran the Office of Management and Budget in the Reagan administration. He wrote a book called The Triumph of Politics that talked about how Reagan's mandate from the American people to reduce the size of government was derailed by Democrats and Republicans both within 6 months of Mr. Reagan's inauguration. I think the biggest political and economic issue that we have is debt and deficits, and the fact that the only way that I can see that we can honor the nominal value of our political obligations is to devalue the purchasing power of the dollar. Having David Stockman, who literally wrote the book about the process, describe the process and talk about how you can prepare your individual portfolio to deal with it, I think will be worth more than the price of admission to the conference. If you disagree with me, by the way, whether you attend live or live stream, if you don't think that I've earned the tuition I charge you, I'll give you your money back. No other conference has that money back guarantee. That isn't to say that the only speaker that we're going to have is David Stockman, but he is particularly topical given what's in the news today and given the issues that people should be concerned about. I'm also, Albert, pleased to say that with 5 weeks remaining before the conference, that our attendance already exceeds last year's attendance. Traditionally, most of the attendance requests are made in the last 4 weeks before the conference opens. And I'm delighted to say that as of today, attendance at the conference is the largest in the conference almost 30-year history, including those years when we ran the conference on behalf of Agora, and they gave conference seats away to their lifetime subscribers. So this will truly be a landmark conference.
All right, symposium.realclassroom.com for details. Rick, I think I'm really looking forward to David. I think in my experience, the only politicians worth listening to are former politicians because they know the truth and they deliver the goods. Same is true with central bankers. So David's always excellent. You're not going to be disappointed if you join us this year.
I would ask people who are listening to this to perhaps go to the Real Classroom and tune in on the interviews that we did with David Stockman a couple of months ago. They were classics from my point of view.
Yeah. No, he always delivers. Okay. Our friend Conrad has a question about G2. When do you think G2 will spin out G3?
I don't think that G2 will need to spin out G3 unless they spin out exploration assets. It is the belief of the G2 people, and I think they're correct, that amalgamating high quality assets in one company increases the trading liquidity, increases the market capitalization, and hence lowers the cost of capital. I would be looking for G2 to acquire something as opposed to spin out something. It could be that as a consequence of acquiring other people, that there are exploration assets that they decide to spin out to shareholders. Whether that will occur simultaneously with the transaction where they acquire the other company or not is something that remains to be seen. But I don't see a spin out in the near term with regards to G2. We've seen their advanced spin out, but I believe that most of the exploration assets within G2 would be, sort of integral to any takeover that occurs of the company itself.
Rick Carl asks about Dynacore. Is relying upon artisanal ore suppliers a solid growth strategy?
Dynacore likely should be private. I don't think that the market is going to really care about a toll milling operation. Their financial performance has been excellent. They obviously serve a place in the market. It should be noted that many of their customers are illegal miners, and to the extent that either the regional or the national government moved against those miners, it could impact the share of Dynacore. But earlier in today's discussion, I said from my own viewpoint, I'm not really interested in investing in small mines. They have all the risks that big mines do, and they usually make you only small money.
I can't remember if we talked about this company already, Rick. Chris asked about Marramaka. Just had a $17 million financing for insiders. Comments?
The right way to do those financings, it was an attractive financing from my point of view. The right way to do those financings is as rights offerings. so that everybody can participate. If the insiders want to participate, they can backstop the rights offering, which is to say, guarantee it gets off. I'm attracted to Marramaka. I'm attracted to the people behind Marramaka. I would prefer that down rounds, growth capital, to the extent that they're going to be gobbled up by insiders, be structured as rights offerings so other existing shareholders can participate. But yes, I think it's a strong conviction by management.
Okay. Worth mentioning, in the classroom, you did do a lecture on the capital stack, Rick. Talked about all types of financing methods. It's a good video to review for investors. It's the Intro to Natural Resource Investing class at Rural Classroom. Let's go to Jean-Francois. Asks about Magna Mining after the KGHM acquisition, Rick.
They need to digest the KGHM acquisition, understanding that it was just one step in what is probably a 4 or 5-step process to consolidate any independent assets in the Sudbury Basin. I maintain Magna as a 5. I have a good regard for the assets. I have a good regard for the people. I'm particularly attracted to the fact that it has the continued support of Dundee and Jonathan Goodman, which is to say there is both financial and adult supervision in place. What I need to see in order to raise my ranking is evidence of successful integration of the newly acquired assets. In other words, I need to see operational efficiency. I need to see an upgrade in sustaining capital investments. I need to see evidence that this growth strategy is being implemented efficiently.
Rick, do you have any
I
reason
am
to
a
move
Magna
long?
shareholder. You know, I mean, voting with my pocketbook, I'm long.
Okay. From Angelo, what are your thoughts on the recent sharp price increase in uranium, and can we trust it?
It depends on your time frame in terms of trusting it. Over 3 months, I have no earthly idea. Over 3, 4, 5 years, yeah, absolutely, positively. The increase in uranium stocks really, I think the beginning of the increase in uranium stocks had to do simply with the fact that they were oversold. They got too cheap. We talked about that, Albert, in a discussion that you and I had in the Rural Classroom about 4 months ago. One of the things that you can do if you're a trader, I'm not, is to trade against the opinion on X. If 80% of the postings are negative to an asset class, you should probably buy it. If 80% of the postings are positive, you should probably sell it. For those of you who bought uranium stocks 6 months ago in the face of a lot of hate, thinking that the hate would dissipate and the stocks would go up, if that was your reason to own the stocks, you should consider selling them. I own the uranium stocks because I think the advent of the term contracts in uranium is a sea change around valuations and a sea change around the cost of capital. This thesis likely takes 3 to 5 years to play out. Although I did buy some stock. I did buy trading positions in the uranium juniors, some of the uranium juniors, 4 or 5 months ago. And I am in the process of taking profits on those. That's probably 20% of my positions in the juniors. The 80% is held as a consequence of my belief that the uranium market as a whole is undergoing a transition, pardon me, with the transition from spot reliant contracts to term reliant contracts. The certainty that this provides to producers and the certainty that this provides to the financial community is something that you see in no other commodity.
Okay. Jay is asking a question about a recent guest, Rick, Mchuan Mining. Is this finally the time to buy?
I would urge everybody to listen to the interview, and I would urge people to look at the quarterlies from Mchuan Mining in the context of the Rural Classroom. I've known Rob Mchuan for 4 decades. I'm long. I'm a gold bull, and separately, I'm a copper bull. There are challenges with his copper deposit. It's an enormous, enormous copper deposit. It's well located, but the geography of it is that it's in a valley floor, which means that the stripping ratio, pushing back the pit walls, you're going to move a lot of rock. So the upfront capital costs are going to be fairly high. Rather than me tell you as a listener what you should do, I think that you should use the tools that we've provided you with the Rule Classroom. Consider the risks and consider the rewards and answer the question for yourself. I'm long.
Okay, our friend Scott Williamson asks, what might be a reasonable valuation to NAV of gold?
I haven't done that. I don't have an NAV for gold that I can cite off the top of my head, and it would take me 6 or 7 minutes to paw through my files to find the last back of the envelope calculation. So I'll respectfully pass on answering the question.
Let's see, from Zultan. Oops, I've just lost it. I'm sorry. Let me see if I can find it again. Sorry about that. These go by quick, Rick. Sometimes I get lost here. What do you think of K92 and PNG as a mining jurisdiction?
PNG is a good jurisdiction in the context of geology. There's some gigantic deposits there. There's a lot of scope for mineralization. K92 is an overlooked asset. Barrick had it. Barrick had to raise some money. Barrick couldn't develop it, so they sold it. And it has delivered a series of positive surprises to the owners. I don't own K92. It was shown to me very early on, and sadly, I outsmarted myself and didn't buy it. It looks as though that deposit wants to get bigger. For people who believe in the upside of the geology, this is certainly something to look at. PNG as a jurisdiction is interesting. It's almost schizophrenic. The federal government in PNG understands that they need mining. They need the revenue from mining. But PNG is really an agglomeration of literally thousands of tribes and clans who have been killing each other, in some circumstances, eating each other for a very long time. Don't ever be looking for political stability, even at a local level in PNG. You have to have a real stomach for social and political dispute to own any PNG stock. I've invested there for a very long time because the geological upside is so high. But I have to say that watching the internal turmoil is challenging.
Let's stick with Zoltan. Asks if you can elaborate on your 4. I assume that's a rating of 4 for Elevate Uranium.
I've downgraded it to a 5 very recently as a consequence of price escalation. I'm attracted to pre-feasibility and feasibility stage uranium companies because I believe that the price certainty and the volume certainty accorded with term contracts means that uranium deposits on a price to indicated net present value basis are probably better than for any other commodity on the planet. And the consequence of that is that I will look at smaller uranium deposits than I will look at, as an example, gold deposits or copper deposits, because of the certainty with regards to offtake and pricing that is potentially offered up by term contracts.
Okay, let's see. Let's go to Tayan. Rick, do you have a rating for Fuerte Metals and Orion?
Fuerte, I have no ranking on. Orion, I have a 5 on.
Okay. Let's see. Okay, let's go to Antia. Rick, are you of the opinion that Andean silver could become a mining district?
If you give me the use of the word could, I guess I can sell any concept at all. that isn't my thesis for owning Andean. My thesis for owning Andean is that if you infill the existing deposit, it's likely plus 100 million ounces and financeable to production. There is infrastructure in place. The infrastructure has been maintained, although I don't know what the infrastructure is worth. I like the fact that Andean, the producing infrastructure is uphill of the processing infrastructure, which means that you use gravity as a source of energy. That's something I really like. So there's a lot of things that I like about it. I don't know the regional geology well enough to comment as to whether or not it could become a district.
Okay, go back to Tillman with another question from Europe, Rick. What is your opinion on the euro as a currency and the European economy?
I think the euro as a currency is challenged. I mean, the good news is it's one of the largest trading blocks in the world, and there's a lot of inherent human and physical wealth in Europe. Um, I think that the European community as a political instrument is an abomination. The idea that Europeans would be constrained by local governments, regional governments, national governments, and then establish a super government in Belgium to compound the inefficiency already wrought by the other three levels of government is problematic. I also think that developing a protocol for the defense of the currency is very difficult. Our mutual friend, Doug Casey, once said the US dollar is an IOU nothing, while the euro is a who owes you nothing. And I think that that's challenging. I think that Europe is even more over politicized than the United States is. I think that as the ability to finance government services becomes more strained, that regional disparities will increase. I don't know how long the German taxpayer is willing or, in fact, able to subsidize, as an example, the Spanish or the Italians or the Greeks. And I think that the historic antipathies that European peoples have felt for each other will be exacerbated by an upcoming fiscal inability to paper over the differences with German money.
Okay, tell me if we did this one already, Rick. This is Han asking about Aurum resources and generation mining.
I don't know enough about either to comment.
Okay, let's see. Okay, let's go to Ingo. You can see that, Rick, considering adding Peyto or Birchcliff to my portfolio. Which oil and gas companies does Rick currently see the best in terms of valuation?
Probably Birchcliff in terms of valuation, but Peyto probably has higher probability or higher net present value proved undeveloped locations. I own them both. Anybody who's considering the Canadian natural gas industry needs to understand the conflicting political personalities in Canada right now. Mr. Carney, not to be confused, I guess, with the circus barker, seems to be of two minds. One that, quote, carbon or climate considerations need to be a deciding factor in financial transactions. And then, I guess because of the yawning fiscal deficit in Canada, that Canada needs to be an energy superpower. I'm very, very, very concerned about political risk in Canada in the oil and gas industry. And I own Peyto and Birchcliff anyway, because their performance in a very difficult economic climate over the last 10 years has been excellent. And because they are cheap relative to the value of their resources and reserves. I really truly couldn't pick between the two. On a valuation basis, I think Birchcliff is better. On a pipeline basis, by pipeline, I don't mean a mechanism for transporting natural gas, but rather they're proved undeveloped locations. I like Pato better.
Rick, have you seen anything from this new Liberal government that you didn't expect going in? You were
Well,
warning us about it before it happened.
I have to say that Mr. Carney has suggested that they need to get their budget under control. Now, he said that and then said he wasn't going to table a budget. Perhaps that's how he gets it under control. But I have to say that his public utterances have been better than the public utterances that I had expected. I had expected that he would be a sort of a competent Trudeau clone. Perhaps I've met him a couple times. He's a very smart guy. Perhaps as a banker, he looked at Canada's finances and he came to the not illogical conclusion that he would have no ability to implement his policies in the absence of revenue from oil and gas. That would be an intelligent conclusion. And whether or not he and his ilk are able to overcome their narrative to affect that conclusion is a very different question.
Okay, just a couple minutes left, so let's sneak in one last question. This is going to be from Ross. Wants to know what you think of AMC Arizona Metals and the fact departing directors gave themselves warrants.
I'm not a shareholder of Arizona Metals. Decent grade, decent location. Arizona remains a very complex permitting jurisdiction, remembering that permitting in the United States is federal, state, and local. The Central Valley of Arizona by now has too many places where shop is spelled SHOPPE. And this deposit is not, from my point of view, even a large tier 2 deposit, let alone a tier 1 deposit. So I'm not a shareholder.
Okay, that about does it, Rick. I want to remind everyone we do new interviews every week at ruleclassroom.com. We also have a video library of excellent courses from Rick Rule about investing in natural resource companies. That's at ruleclassroom.com. We also have our annual in-person symposium coming up July 7th through 11th in Boca Raton, Florida, Rick. We are on the countdown to this symposium, so we're going to be talking about it a lot. You are talking to all the sponsors. We are posting those videos in Rule Classroom. Rick, any thoughts about maybe interviews you've done recently and the time we're going to have in Boca Raton?
Well, I think the interview that we just did with Agnico Eagle was a particularly informative interview. But I would urge, I would tell people, first of all, that if your objection to coming to the conference is that you can't come to Boca Raton, that we can overcome that objection. We have a great live stream presentation. And we have invested a lot in making your live stream participation valuable to you. We had attendees from 33 countries last year via live stream. I would also urge you, before you come to the conference, to review the entire Introduction to Natural Resource Investing series at the Rule Classroom. You get out of the conference what you put into it. Listen to the interviews, find the interviews that attract you, then use the tools that we teach at the Rule Classroom to go over the publicly available information around each of the issuers so that you can use your time at the conference more efficiently. Albert, you and I have talked a lot about the tyranny of time. The fact that we have only 4 days to give people between 50 and 55 hours of very dense and very valuable programming. So it's important that people come very, very, very well prepared. It's important for people to note, too, that whether or not you attend live or via live stream, that recordings of the entire proceedings, including all of the breakout sessions, will be available whether or not you attend live or via live stream. It is my hope that after the conference, discussion groups arise spontaneously at the Rule Classroom so that the Rule Classroom members who were attendees at the conference, either live or live stream, can compare their notes. It's my dream that the Rural Classroom become a continuing interactive community based on great principles, and that the symposium itself is really merely a nexus so that you can use the lessons that we teach around a curated group of exhibitors.
Rick, the live stream product is great. I love it. I actually use it while I'm there, but I encourage everyone to at least come once in person. Go on the boat cruise, join us for drinks, meet Rick in person, meet our great speakers and our sponsors in person. It's really a really nice experience, albeit kind of a long haul. Rick is probably himself traveling from the furthest point in the contiguous states to get there, but he's doing it, so we have no excuse. Rick, that about does it.
Albert, what you say, just one more word about the conference. I had a guy email me about 8 years ago talking about being there live. He said the ability to walk around the exhibit floor, following Robert Friedland first and then Ross Beatty, seeing what booths they stopped into and occasionally eavesdropping on the questions that they asked was worth the price of admission by itself if the rest was for free. So if you have the ability to attend live, it's great. There's a lot of communication that's nonverbal. If you don't, live stream is a great alternative. We're confident enough in the product that whether you attend live or via live stream, remember there's an absolute money back guarantee. If you think for any reason whatsoever that we didn't deliver, we'll give your money back. There's no other conference in the world that has that much confidence.
Yeah, and then regarding the classroom, Rick, we're starting to form these great online relationships in the real classroom. It is nice to meet people in person once a year, or if you haven't, take that first step. So July 7th through 11th, there's the link right there on screen. Please join us if you can. Rick, thank you very much for your time again. We went a little bit over again. My apologies, but we appreciate your time.
Pleasure. It was fun. I look forward to it again.
All right, everyone out there, thank you very much for your questions. See you again next time.